All right. Good morning, good afternoon, possibly good evening, depending upon what time zone you are joining us from. We're going to start here momentarily. My name is Don Kaufman. I just want to make sure that everybody hears me all right. You see the screen, high probability guide to beating the bear market. So please chat in where you might be joining us from today, and we'll get started here just momentarily. Start with a few informalities, and then we will jump into the bulk of today's presentation. Just want to again make sure that you guys hear us all right, see the screen okay, and we will get off and rolling here in just a few moments. All right, back to it, making sure everybody's good. Excellent. A few of you guys are chatting in right now. So welcome everybody. My name is Don Kaufman. Again, a few informalities today, one of which here, we'll even turn on the camera. So welcome. I'm actually off the island right now. I say off the island. We live in the Virgin Islands, specifically St. Croix. We're actually back in Arizona just for a few weeks. So welcome to Payson, Arizona. I'm up here in the mountains because it was the last time I was down there about 115 degrees down in the valley. What is it? 70 degrees up here, 77 right now. It's beautiful. So feel free, join us and chat in again where you're joining us from. Um, awesome. That's you obviously hear us all right, you see us all right. And as I get started here, as I was going to say, a few informal aspects here. Number one, you can ask questions. Please ask questions throughout the course of today's presentation. It's kind of what we're here for. So by all means, ask questions. Myself, it's Jeff, it's Brian Aponte. I think we have Brandon Chapman in here as well to jump in and help us answer some of those questions. And again, I'll probably answer most of your questions verbally here. Excuse me. If you do see me looking around a little bit here, anywhere other than the camera, I have a monitor here, a monitor here, a monitor over here. So actually your Q&A is well over there. So by all means, I am reading this. You're going to get a tremendous amount out of this today. By the way, everybody always asks, is this live? It's live. So I only really like doing these presentations now while the markets are open. So obviously you can see some sell side activity in the S&Ps today. And I'm going to jump right into it. Again, I'm going to be rather brief to start with. We'll get into this. Again, we're going to cover a tremendous amount of material today. So if you will, sit back, relax, try to pay attention, and try to keep up. And again, feel free to chat in at any point. Somebody said the chat says it's disabled. I see it. It's all good, man. It's all good. But you can actually chat into the question and answer box as well. I will make sure that that is okay to go. Yeah, chat looks fairly good. All right. So without further ado, again, my name is Don Kaufman. You are watching a TheoTrade presentation. Specifically today, we're going to talk about the high probability guide to beating the bear market. Almost everything I discussed today is based heavily on volatility and less about direction, a little bit of a risk disclosure. I am no longer in the broker-dealer business. I'll discuss my background here momentarily. But again, we are in the financial education realm. This is why you're here. Today, we're going to talk exclusively about Ultima. And it's not ultimate. I'll describe exactly what Ultima happens to be, excuse me, momentarily, which they're absolutely ideal trades for the current market environment. The more volatility, the more uncertainty, if you will, is all designated as just prime time for Ultima trades and generating potential monthly income from this, which we're going to discuss extensively as well. We're going to talk about a couple of different trading symbols that professionals use to be able to actually gauge and trade Ultima. We're going to learn how and where you can find edge as a retail trader. I'll speak to some extent on that particular front here, probably in the next 15 to 20 minutes. We're going to talk exclusively about edge. We're going to talk about high probability trades while actually mitigating some of the back end risk, which effectively means, hey, how can we actually enter into some higher probability trades, but when we are wrong, not taking necessarily large losses? Talk about that in some extent. And of course, you're going to find which products are going to be viable candidates and which products are a recipe for disaster. Bear with me on that front. When I mention the terminology product, don't let that throw you. Okay. It just means like, hey, listen, I may not be as likely to trade something like Tesla as I would the S&Ps. So we're going to discuss what works as a candidate and what does not. A few housekeeping items. Housekeeping, this is skill set. I have over 200 slides to get through in the next probably about 90 minutes, if that's all right with everybody. I tell everybody right up front, which I'm going to discuss here in just a moment, a little bit about my background, but we are not here to push any courses or anything down your throat. What we do here is and has become kind of industry standard, which I'll also discuss here momentarily. So this is a skill set. There's a lot of material I'm going to cover here. I would suggest if you're a little newer to this, kind of sit back, try to absorb some of the bigger concepts. If you're a bit more experienced, listen, those of you that are experienced, don't think for a second that you're not going to get anything new here. So I've kind of, gauged what our audience happens to be, a typical audience happens to be. I'm going to be firing high, I'm going to be firing low, and everything in between. Those of you that are experienced, you actually want to latch on to some of the details, some of what we term criteria. Those of you that are a little newer, again, big concepts. Shut the door, turn off Skype chat, Skype or chat or whatever else is distracting you. Close Facebook forever. Kick out the kids, the grandkids. The dog can stay. But listen, this is important. For the next 90 minutes, as I said, I am going to fire a tremendous amount at you. Here's a little bit about my background. So I'll give you the kind of the dime tour of my background. People constantly ask how I got involved in this business. I grew up in the business. Not too many people probably grew up in and around traders. I did. I'm not sure. By the way, I'm not sure if that's fortunate or unfortunately. I grew up around traders. And one of the things that brings me to you is I watched order flow for 15 years, and that is in large part why I'm here. I have a pretty unique skill set. I know everything there is to know on the retail side about trade, and that is specifically what makes a retail trader. By the way, when I talk about retail trader, I come from the market making background. I think that market making is a completely different business than what we now do as retail traders. But I spent 15 years inside of the brokerage world. So as I said, a little background on me. I grew up around traders, started trading in the late 1990s, spent about 2 years in Chicago. Then I was invited to a startup brokerage firm called thinkorswim. I was like lucky number 13 in terms of employees at thinkorswim. I was on the executive team of thinkorswim when we took the company public in 2007. I was on the executive team of thinkorswim when the company was purchased by none other than TD Ameritrade in 2009. And during my entire kind of livelihood at both thinkorswim and TD Ameritrade, I ran and built their entire education division. Much of the education that we discuss here, specifically at TheoTrade, comes from that background knowledge and the study of client order flow. And one thing I put a lot of weight into throughout the course of today's presentation is just that. First of all, if you have no idea what client order flow happens to be, listen, I got to see everything that you ever did in this business. Like if you sold iron condors between 2001 and 2015, I can tell you unequivocally the success rate. What we did to build education at thinkorswim and what we did to build education at TD Ameritrade comes from having watched billions and billions of dollars of client order flow. And what we've actually derived from that, we took it even a step further here at TheoTrade. And by the way, TheoTrade, it's not just myself, it's not just the Don Kaufman show. We have 7 other full-time instructors, many of which do have backgrounds from that thinkorswim TD Ameritrade background, which is unequivocally, I mean, the thinkorswim platform was, the most pivotal trading application in the entire financial industry for the better part of about 15 years. Today, we'll discuss a little bit about Tastyworks has kind of come up in the world. So again, what you're going to learn today comes from watching literally billions of others' mistakes and the knowledge of what works best specifically for you, for retail traders over time. By the way, if you ever need to get a hold of me after today, I encourage it. Email us. It's support at TheoTrade.com. We use a common inbox. Just put Don Kaufman in the heading, and that will, in fact, go directly to me. I still do a couple of TV appearances, usually 2 or 3 every week. This is actually TD Ameritrade TV. This is actually the last time, though, that I was in studio in Chicago. Most of those appearances now I do from the loveliness of my office. You don't have to go anywhere. This is one of the more, I think, larger appearances on CNBC. Myself did it against, of course, Kevin O'Leary. Let's get down to business. One of the first things that I want you to understand today, we don't sell anything here at TheoTrade up front. We now open accounts for Tastyworks and another firm specifically called Magnify. What I'm telling you is that I am going to give you a preview of what our education happens to be specifically here at TheoTrade. Again, I'm going to give you a preview of that today. Okay, there is nothing today but education on this particular front. The reason I mentioned Tastyworks right up front, if you want to continue your education here with TheoTrade, we will give you 90 days, okay, all-inclusive access to TheoTrade totally on the house for those of you that open up a Tastyworks account. Tastyworks, in addition, if you're unfamiliar with Tastyworks, they are a brokerage firm. It is the original and founders of thinkorswim. So obviously, I worked with those individuals for many years. After TD Ameritrade bought thinkorswim, the original founders moved on. They opened up a firm called Tastyworks just a few years ago. Tastyworks is a direct competitor now of thinkorswim, TD Ameritrade, obviously Charles Schwab. We are now, very much trading on Tastyworks. Yes, I also keep thinkorswim up, and we'll have a discussion in there, but Tastyworks is unequivocally the next generation platform, again, from the founders of thinkorswim. So open a Tastyworks account, you're in. Some of you already have a Tastyworks account. We'll have an answer for that as well. Tastyworks additionally will hand you $200 in stock for opening your account. TheoTrade will, in addition, give you a lifetime small exchange subscription. We pay out of pocket $100 for that subscription to the small exchange. If you're unfamiliar with small exchange, it's a newer futures exchange. Just opened up about 2 years ago. They are coming out with new and innovative products. They're really kind of direct competitors of the Chicago Mercantile Exchange. Small exchange, is again also an up and comer in this industry. All right. Last but definitely not least, if you open up a Tastyworks account, you get access to TheoTrade. You'll also get 6-week access pass to a beginner's guide with Ultima trades with none other than Brandon Chapman. Again, we're going to talk expressly about Ultima today. That course, that course starts September 12th. So you have just about 6 weeks to get your Tastyworks account up and funded. And as I said, you're in. It's 90 days of TheoTrade, everything we offer, small exchange subscription, and a beginner's guide mentorship into Ultima trades. Okay, this is TheoTrade.com/Tastyworks. I just let everybody know up front. I don't want you to think this is a big, the pitch. There's no pitch. We're going to do nothing but education from here on out. If you already have a Tastyworks account, you can do the same thing by opening a Magnify account. Open a Magnify account now. If you're not familiar with Magnify accounts, okay, this is huge now in the registered investment advisory world. This is a technology company. 90 days of TheoTrade membership. If you're a US citizen, open a Magnify account through the link, theotrade.com/mag, fund the account with $100 or more. That's it, $100 or more. You fund the account, you get access to TheoTrade again for 90 days. In addition, we will also give you a access pass to the 6 weeks beginner's guide with Ultimate Trades with Brandon Chapman. That link is theotrade.com/mag. That's M as in Mary, A as in Apple, G as in George. So the reason we do this, again, there's no risk anymore in TheoTrade. We wanted to make this a completely kind of frictionless trade. These firms want to do business with TheoTrade. Our clients are the ones that survive, not just survive, but thrive in the midst of volatility. So let's get down to business here today. We'll put the links in right now. Excuse me. If you guys need anything throughout the course of the presentation, please, in the question and answer box or the chat box, chat in, and we're more than happy to answer for that for you. All right. What are Ultima trades? Higher volatility has resulted in significantly more options premium. One of the first things that I kind of mention to people is we've been in substantially higher volatility since the onset of COVID. So we are now, almost 2.5 years into a more volatile situation. Now, it's not just my take on it. If we're to bring up, chart on VIX, let's actually bring up a chart on VIX. Go back, for example, 3 years. Let's go ahead and close up this left sidebar. There's the onset of COVID. And again, I'm just going to mark it on your screen. That's the onset of COVID. And you go, well, we were lower volatility here. Now we're higher volatility. But bear with me on this thought. You can go back and pull up 15 years. Okay. You pull up 15 years in here. The last time we've seen sustained volatility like this, you do realize you have to go all the way back to the financial crisis. And I'm going to be very frank in saying, okay, I don't mind saying this, volatility is just at the forefront right now. And I've got all kinds of evidence to support as such, meaning that if you think that the market's been rough at this point on a year-to-date basis, frankly speaking, you ain't seen nothing yet. In addition to higher volatility, we've had incredible skew, and the volatility remains at record highs, which is actually known as Ultima. Listen, there's some terminology I'm throwing at you, like, oh, the volatility, and the options skew. Here's bottom line. Bottom line is this. This is a normal distribution curve, right? Forget about what you think. Oh, it's skew, it's kurtosis. Like, forget about those terms, all right? We're going to get very, very specific over here. Okay, markets kind of price risk with a distribution curve, but nothing is perfect in this world. Basically, what we've had is since the onset of COVID, we've had wild skew. And what skew happens to mean, okay, just again, bottom line tactic here, right? What skew happens to mean, it's a big distortion. It's like a twisting, if you will, of risk in the markets. Risk, okay, is kind of all over the place. When I say all over the place, like risk is all over the place, what does that mean? It's actually how things are priced are providing a pretty phenomenal edge if you know how to go after that edge. I'm going to say that again. Pricing has changed. It's tweaked. It's distorted right now. If you know a little bit about this, you go after the edge, okay, wherever the edge happens to lie. And that's what we're going to discuss here. How can we use skew to our advantage? Skew provides edge in the sale of out-of-the-money options. Now, time out. I said the O word. It's the second time I've said options. Yes, I said the word options, the O word. And we're going to discuss options. Over the last few years, a lot of traders have gone out and bought options. They're like, I love this business. I buy options. And that had actually tweaked, okay, option pricing to actually be beneficial for sellers. That tweak remains at this point in time. So many of you are probably relatively familiar with being a buyer of options. How many people here, though, have had some experimentation with selling options? It's funny because a lot of people hear kind of through the grapevine that selling options is a way to make money. But if you've experimented with selling options, usually one of the first things that people learn about selling options isn't always a positive thing. You're like, I sold some options and then I got hit by a freight train. Seriously, how many people here have heard that before? That, heard through the grapevine selling options is a way to make money. Just Y for yes, N for no. These are not rhetorical questions. You can jump in here at any time, right? So I just want to make sure everybody's on the same page. Make sure we're good there. All right. So some people have actually heard this. Okay, good. So again, if you've experimented with the idea of selling options, some people have used trades called spreads. Some people are like bull call spreads, bear call spreads, bull put spreads, bear put spreads. Some people have gotten crazy and used like, iron condors and so forth. But I mean, the fact is, again, today's session is going to separate myth from real risk, in fact, from fiction in selling options premium. We are going to teach you, okay? We're going to teach you exactly how to do that. Make sure the chat's okay. Make sure that we get the chat back open over there. All right. A few people are saying that it is disabled. So I do want to make sure that we are good to go. All right. I just opened chat to everyone. Try it now. Huh? Anybody? Okay. I want to make sure the chat is good to go. It did look like we had a little bit of an issue in there. So please feel free in the chat box to chat in. Anybody? Anybody? Maybe still disabled. I'm just looking for the tool in here to make sure that we've actually got it open. All right. Yeah, it still says chat's disabled. We'll have somebody work on it on our side. Yeah, it looks like it could be a Zoom issue. For right now, feel free to just chat in specifically to the question and answer box, and we'll look into it. Interesting. All right. Yeah, I've used the Q&A right now. Okay, so I'll close down chat completely, and you guys will have to use the Q&A. Makes it a little bit more challenging in there. Okay, with that, so let's jump into it. Let's talk a little bit about selling premium. Again, sorry about that. Zoom. Never had problems with Zoom. Today's like my first Zoom related issue. There's a first for everything. So with that, if you're brand new to this, listen, don't panic. I know that there's always people tuned in that are just vehemently against options and options trading. And here's my argument for you, and I'm serious about this. So as I said, I kind of grew up around this business. I mean, I literally grew up around this business. I had an uncle that was a market maker. My cousins all traded on the floor. Our holiday dinners, we're talking about in the money, out of the money, calls, puts. First of all, one of the things you got to rationalize here that today, the options market is actually moving stock. So the cart is actually leading the horse. And I want you guys to know that right off the bat. There's no if, and, or but about it. People, they come up with all these reasons. So people are buying Apple for this. How about people are buying Apple because there's call buying in Apple. Call buying in Apple generates what we call a gamma squeeze. The gamma squeeze causes hedging activity. Listen, I come from the market making background. Like I get, all right, what drives markets. But my argument to you is if you don't want to learn options, this ain't the business for you. Even if you're not necessarily going to trade options, there has to be some understanding, because even in the investment world, options drive markets today. Again, it is the cart leading the horse. So even if you have no intention of trading options, please, okay, tune into this. You know, I've got no skin in the game either way for what you do with your capital, but I am telling you, without unequivocation, you know, I never thought that options would lead markets, but they do. They do today. There's that much liquidity inside of the option market. Maybe you know nothing about options, okay, for today's session. The other aspect that's critical here, selling options premium doesn't have to be about a lot of money. If you have $2,000 in an account, you're fine. $5,000 in a retirement account, you can do anything and everything that I'm going to discuss today with as little as $2,000 in your account. And I get so specific and so distinct about that because everybody gets just, you know, oh, this is going to cost me a lot of money. I ain't got the margin for this. Listen, for those of you that are new, as I said, for starters, grasp big concepts. For those of you that are experienced, trust me, I'll challenge you. Many facets of selling premium. There's a lot of terminology around selling premium. Selling premium means selling options. Selling premium can mean credit spreads. Selling premium can be call spreads, put spreads. It can also construe as delta neutral trading. It could be iron condors. It could be called selling naked. We can call this gamma scalping. Listen, you can create both bullish and bearish positions selling premium, but generally considered market neutral. That means I'm not going to talk a lot today, and I want you guys to know this, like I'm not going to talk a lot today about MACDs and Fibonacci's and Bollinger Bands. Like if you think that the setup, here's the setup, if the setup is the right way to make money, have you not seen this marketplace? Do you have any idea what we're about to go through in the next 24 hours of trade? Okay, forget for the fact that tonight is Google, Microsoft. Tomorrow is the Fed. Facebook is after hours. The day after that holds Amazon and Apple. And oh my, like this is going to be Mr. Toad's wild ride just in the next 48 to 72 hours of trade. None of that. You can't have a good, strong directional feel in the midst of volatility. You have any idea what Jerome Powell's going to say? He's going to say 75 basis points. And then he goes back in his little hole because he saw a shadow and it's 6 more weeks of winter. Yes, I always compare the Fed to Punxsutawney Phil because it's every 6 weeks that we get to hear from them. Anyway, with that, how our members are doing year to date. Big Tex, thanks for the training, up 23%. Okay, this is no pitch to you. I want you to understand how people are doing that are trading with us here at TheoTrade. We do trade alerts. Carla up 30%. Now, this is a couple of weeks ago. All right, it was back in June 16th. I asked the question. Okay, June 16th, up 35%. Backyard Bob, way ahead of last year, up 67%. But I asked the question again. Okay, look at the date. I asked it again today. I don't mind. I have no shame in saying, like, how is everybody doing on a year-to-date basis? Okay, Troy, best year yet. Settled in on trading style, only here part-time though. David, my account's an all-time high on 714. Okay, these are good things, up 14%. You do realize that the average individual would be pacing with the S&Ps, which is roughly down anywhere from 17 to 20%. Okay, up 53%. These are good things. Let's jump into it. Probability and profitability. Your trading is based on probability. We can create trades that have a 90% probability of success. But I want you to know right off the bat, people always ask me, we get, you know, dozens of emails every day here at TheoTrade. And if you're curious, we have just about 6,000 members on TheoTrade. All right. So about 6,000 people kind of conglomerate into TheoTrade. And on a day-to-day basis, prospective clientele like yourselves, they send us emails all day, every day. We get, you know, a dozen emails every day, and the people literally ask, how often are you right? And my response to you is, who cares? Like, you can be right 95% of the time. That does not designate that you've made money. And I like to throw that out there because it's frustrating for me. Like, people, oh, look, you can create trades that are 90% probability, still lose money. Probability has nothing to do with profitability. I want to make that clear. Probability has nothing to do with profitability. You know that you could be right 30% of the time, but you could still make a ton of money. You can be right 95% of the time and you could lose money. You go, how's that possible? You got to remember this. Markets are always a trade-off. Okay, higher probability, higher risk. You could be right 90% of the time, you can still lose money. So where can you find edge? Because what we want to talk about is not just about being right or being wrong. Okay, because that stuff is for the monkeys that are on CNBC. You know, they get in there and we are hit the market bottom. Really? We've hit the market bottom? That's why Walmart warned last night, right? That's why Walmart came out last night and said, consumer is taking a beating. And the week before that, we heard from Verizon and AT&T said, consumer is not only taking a beating, they're not even paying their phone bill. I mean, AT&T turned around and said, we're going to set aside $2 billion because that's the kind of cash burn they're about to have, assuming that, well, the consumer is not doing well. Walmart just confirmed that. But it's okay because CNBC called the bottom, 10 days ago. This stuff is just chaos. If you're here to be right or wrong, you've already lost. You can't do it, okay? We're going to talk about finding edge in this marketplace. And I'm just going to dive right into it right here, right now. So we're going to talk about probability and premium selling tactics. First of all, okay? I mean, the first thing I want to discuss in here, this is a stock and the stock trading right smack at 100. So let's start with something easy. This is a distribution curve. And the reason I use the distribution curve, I think it's really nicely representative of what the market can do. The market could come up here to 110. The market could come down here to 90, right? Okay, so there's a chance we go up here, chance we go down here, there's a chance we go all the way up here, chance we get all the way down here. Okay, that's trading. All right, what we're going to look at right now is first and foremost, we're going to look at the stock, and the stock's trading at $100. We're going to call the stock stock. Okay, and stock is at 100. Now, do I own the stock? No. Why do I not own the stock? Have you not looked at what the market's capable of right now? I hate to have to go back to this pretty consistently, but when people say, well, you're going to go out and you're going to buy that stock, okay, do I really want to buy it right now? I mean, right now, don't worry, the S&Ps are only down 1%. We haven't heard from the Fed. We haven't heard from Microsoft. We haven't heard from Google. Yeah, Google and Microsoft are after the bell. I'm excited about the project. You cannot rely on markets right now, okay, to produce positive expected returns, meaning that you can't rely on direction to produce positive expected returns. So then why would I ever want to own the stock? What happens if I own the stock? Bad news came out about a competitor of this stock, okay? Let's call this stock Facebook. And Snapchat comes out with bad earnings and boom, it's all over but the crying, okay? This stock could gap down easily $10. All of a sudden it's worth $90. You're down 10. Okay. It's all over but the crying at that point. I don't want to own the stock. I don't have to own the stock. Okay. So forget about owning stock. I'm going to go out and I'm just going to trade an option. And in this particular case, I'm going to look at the buy side first, then I'm going to look at the sell side, right? I'm going to go out and I'm going to say I'm going to buy the 120 call. That 120 call is going to be trading for a whopping $1. It's going to cost me $1. So it's going to cost me $1. Let's say that thing is good for 3 months at a time. Time out. I'm a buyer of a 120 call. What does a 120 call give me the right to do? So for those of you that are brand new to options, just a brief and dirty recap. If you're brand new to options, a 120 call gives me the right to buy the stock at 120. Now, why would I want to buy the stock at 120? If you're buying a 120 call, you must think that the stock is going to go up. There's not too many other reasons for buying a 120 call, and you're going to pay $1 for it. Okay, but how far does the stock have to go up? The stock has to go up 20%, and you don't even break even at that point. You have to hit 121, which is 120 plus the $1 you paid. You got to hit 121 just to effectively break even. Are we getting somewhere? Are we getting to you? Right? That's a big move. So what I want to first do is make sure, especially those of you that are new, okay? Those of you that are new, right? Listen, a 120 call, okay, gives you the right to buy the stock at 120. Now, do I really want to buy the stock at 120? No! Why am I buying a 120 call? The only reason you're buying a 120 call is you think that stock is going to go up. You think that stock is going to soar. That kind of activity hasn't really happened lately, but it's okay. But if that stock got all the way to 130, you're a genius because you have the right to buy the stock at 120. Everybody else in the world has to go out and pay 130 for it. Your 120 call is worth at least $10. And how do you know that? Because you have the right to buy the stock at 120. If you have the right to buy the stock at 120, could you buy the stock at 120? And then you could turn around and sell it in the open market for 130. And that way you would make at least $10. But you never actually have to buy the stock. You could just sell the what? could just sell the call. People trade options to never have to trade stock. I want to make that clear and distinct. People trade options to never have to trade the stock. But as I just elaborated on a moment ago, that is the buy side of options. Now we're going to look at the exact same option, Okay, and what option was it? Okay, it was the 120 call. But in this case, I'm going to go out and I'm going to sell a 120 call. And by selling a 120 call, I'm going to collect a $1, okay, credit. Now stop right there. I'm going to put it down below. Okay, we're going to sell a 120 call. For that 120 call, I'm going to collect exactly a $1 credit. That call is going to be good for 3 months. Whoa. It's going to be good for 3 months of time. Now, some of you get tortured by that 3 months. I'll get to that in just a minute. What it's also imperative for you to understand about options as a trader, okay? You can trade from the buy side or you can trade from the sell side. People try to make options so much more difficult than it needs to be. And I just want to spend a minute on that because when you say make it so difficult, like what can you do in options? I mean, legit, what can you do in options? You ever think about that? Again, the question and answer box is open. I'm pointing to the screen over here because I get a screen way over there. Question and answer box, like what can you do in option? You know what the answer is? There's only two options. There's calls and there's puts. We're only talking about a call here, a call and a put. What can you do in options? You can be a buyer or a seller, right? You can be a buyer or a seller. That's it. And people go, no, I can do an iron condor. Oh, you know what an iron condor does? It buys this, sells this, buys this. Done. You got calls and puts. I don't care. What do you call it? Okay, it's a potato trade. You could look at it any way you want. It's the same exact crap. I remember when I got involved in this business in the late 90s and I started trading with a family member of mine. And it'd be like, oh, I've got this new strategy. He's like, kid, seriously? He's like, everything got figured out in this business in the 1970s. He goes, what were you doing in the 1970s? And I go, I was being bored. I mean, I'm in my mid to late 40s right now, but I kind of got the message at the point. You got calls, you got puts, you can buy them or sell them. Listen, we're going to sell a 120 call. So in options, buyers have rights. The buyer would have the right to buy the stock at 120. The seller has an obligation, okay, to give somebody else stock at 120. So let's imagine that you opened the position. Just bear with me on this. You open the position by selling a 120 call. You go, I can't do it. I don't have the margin. Do not worry about margin. If I hear anybody start talking about margin, thinking about margin, I know you're thinking about margin right now. Stop that garbage. Okay, stop it. Would you guys like to know how to get around, number one, how to get around margin? Everybody want to know that? You tell me. You guys want to learn how to get around margin? Yes or no? Okay. We'll just leave all the questions in the open portion of this. Okay. So I'll just make sure we leave all the questions, the Q&A in the open portion of this. Do you want to learn how to get around margin? Okay, it's not a rhetorical question. All right. And do you want to learn how to get around day trading margin? It's pretty quiet. So in the question and answer box, just a Y for yes and for no. So we're going to discuss a little bit of both. So if you're concerned about margin right now, don't be concerned about that margin because it's pretty straightforward. Like margin, I can teach you to circumnavigate not all the margin restriction, most of the margin restriction. And moreover, we can get around the day trading margin rule. That's been easy for years. It's just most people don't realize what that happens to be. All right. With that, so we're going to go out and we're going to open a position, for instance, by you selling a 120 call. And this is actually what we term selling naked. Now, I'm not sitting here telling you, you need to sell naked, okay? So I'm not telling you that you need to sell naked, and we'll get to that part, but I just want you to understand conceptually what you're looking at here. So you sell a 120 call and you collect $1. When you sell something for $1, you're selling yourself, number one, into an obligation. And number two, what's the most you can make if you sell something for $1? Now, if you sell something for $1, the most you can make is $1. Like if you sold a car, a used car, you go, I sold a car for 10 grand. Guess what? Nobody's going to come back a week later and go, that was a hell of a car you sold me. Here's another 20 grand. That's not going to happen. If you sell something for $1, the most you make on it is $1. Okay. And people like, they look at this first example, they go, I don't like this. Okay. The most I can make is $1. Okay. Yeah. The most you can make is $1, but we haven't talked about contract size. Like this could be $100,000. So you can make 100 grand if you do this. Like just relax, right? Relax. Don't worry about margin. Don't worry about the overall credit. I just need you to understand conceptually, what's the concept over here? You sell the 120 call and you collect $1. Now, what can happen to you? I'll tell you exactly what can happen to you. Over the next 3 months, the stock can move. If the stock stays flat, you keep your $1. If the stock goes down, you keep your $1. Even if the stock starts to go up, probably going to keep your $1. I mean, this thing has to move against you by 20% for you to start to do what? Start to lose money. Now, could the stock move 20% higher in the next 3 months? Absolutely, unequivocally, yes. Of course, the stock can move up. No one gives you a free lunch in this business. You know, people always say, I got the perfect setup. This is it. This is the, the amazing thing over here. No one gives you a free lunch in this business. If you think you found a free lunch, I'm serious, email me. I'll tell you why it's not a free lunch. You know, it's the perfect setup over here. You go out and you sell the 120 call, you collect $1. And you know what? Okay. Over the next couple of weeks, you'd be okay. And somebody said, what if vol increases? It's funny. What if vol increases? Well, if volatility is going up, that inherently means that the stock is actually going down, because as the market goes down is where volatility goes up. But if the market goes up, consequently, most of the time the volatility goes down, it collapses in. All I want you to understand at this point in time, this is an incredibly high probability trade. But on the flip side, what if the stock rallied massively? Well, I mean, you got this 20% buffer over here, but if the stock did rally massively, you could take some pretty heavy losses. Do we agree on that? Okay. We also have to agree on one thing. This is probably construed as an extraordinarily high probability trade. We okay so far? Question is, can you make a living off of that? Well, let's actually get to the nuts and bolts of it. We okay? I want to make sure that everybody's good, right? Make sure everybody's good in here. Like if you're a little confused right now, then good, you should be. So let's actually cruise over to Tastyworks. I know I got to tell you, the option chains in Tastyworks now, I prefer the option chains in Tastyworks. So I'm going to go over to a product called Spiders. And I'm actually going to show you what you can do now when I say real time, like in a real market condition, real market conditions. Is everybody here familiar with Spiders? Okay, everybody familiar with Spiders? Looks like everybody's pretty good. Huh? Okay to go. Just making sure everybody's familiar with Spiders, and it's good. All right. So if you're not, you're about to get familiar with Spiders. Spiders are probably one of the most prolific markets in the entire industry. It's the most liquid options market. Nothing trades more contract size than the Spiders. Tell you what I'm going to do. I'm going to mirror the trade that I just did a moment ago. If you've never looked at an option chain before, you ready? If you've never looked at an option chain before, everything, let me just highlight this. Everything over here, change the color. Everything over here is calls. Everything over here is puts. So this side of the screen is calls. I'm just going to focus on calls right now. The reason I'm just focusing on calls, I don't know, I think it makes it a lot easier for people. I think it's easier to interpret calls than puts. We'll talk about puts, but calls is the right to buy, but you're selling the right to buy. You're selling somebody the right to take stock from you at 120. I don't own any stock. Well, that's how you can lose money. But let's actually get conceptually to the trade and where you can find some edge. I'm going to find an options trading, just around $1 works. Okay, this will be fine out here. So we're going to look, and I'm actually going to write this up, and I'm going to do a nice thick print so everybody can see it. We're going to look at the idea all the way 115 days out. You ready? Okay, here's my idea. We're going to sell, the 460 calls. Okay. What are the 460 calls trading for? Right now, what are the 460 calls trading for? Trading $1.25. Okay. They're trading for $1.25. So what am I selling these for? All the way for the November expiration. We okay? That's it. That's the trade. You're like, that's Ultima? Well, we haven't quite gotten there just yet, but we're working on it. We're going to go out and we're going to sell 460 calls for $1.25. Now, if you sell something for $1.25, and by the way, yes, I know chat is disabled. I'm more than aware chat is disabled. So just do me the favor, just chat into the question and answer box. Okay, just chat into the question and answer box. It's fine over there. There's nothing we can do about it. We have a broken Zoom. My Zoom is broken. I never have problems with Zoom, man. Never have problems with Zoom. Okay, attendees can chat with hosts and panelists. Oh, I think it just opened up. Panelists can chat with everyone. Let me see. Test. Did everybody see my test? I think I found it. They had it automatically locked down. Yes, it is open. You know what's crazy? There was something that was missing on my screen that just appeared. Okay. It's fixed. Okay. Game on. So November expiration. It's 115 days out. And I'm doing this like literally to torture you. I'm going to sell the 460 calls. Now, 460 calls give somebody the right to buy stock at 460, but we're selling them. Where's the stock right now? The stock is basically, okay, where is the stock? Stock's at 391. Like, dude, that's really far away. That's 70 S&P points away. Do you know in the SPX that's 700 points away? Yes, you're 700 points out of the money. You get to collect $1.25. You're like, it's free money. It's not free money. Here's the question. $1.25 drives everybody crazy. What if I told you you can make, okay, a good return in less than 30 days on this? Interest you? Maybe, maybe not. Okay, let's close up the November expiration. Okay, so what I want to get to here is if you look at the November expiration, there's 115 days. And then you look at the October expiration, there's 87 days. Just bear with me on this thought for 1 second. Let's assume that the marketplace stayed flat precisely for the next month. Just stayed flat. It's not going to stay flat, but just assume it stays flat. How much can you make on this? Because I'm going to tell you what I'm going to do. Exactly 1 month from now, I'm going to turn around and I'm going to buy back the 460 call. Question is, what am I going to buy it back from? Because everybody looks at this and go, you can't make money 30 days by selling options so far out in time. Doesn't make sense. Some guy in a Facebook group told me I should sell options with 3 days left. By the way, that's completely and totally nuts. You sell options with short duration right now, you're going to get killed. You sell options with longer duration. That's what Ultima amounts to. So if I sold an option with 115 days, okay, when there's only 87 days left, I'm going to buy it back. How many days is in between there? 115 to 87. What is that? 28 days. Less than 1 month. In less than 1 month, I'm going to turn around and I'm going to buy back my 460 calls. The question is, what are the 460 calls going to be trading for? Oh, there it is. There it is. Those 460 calls are going to be trading for 58 cents. So let's say I buy them back at that point. Let's get crazy. Let's include commissions. I'm going to buy them back, okay, for 60 cents. What am I up on this trade? Come on, what am I up? All right, I'm up over 65 cents. Let's say I'm up over 50%. I'm up over 50% in 28 days. Can you do that with your strategy? How much risk am I really assuming in here? The S&P has to move 700 points against me. The S&Ps have to move to almost all-time highs for me to actually take a loss in this trade. There's no question, you know, strategically, it's going to be very effective. It's going to be incredibly high probability trade. Now, it's not over. What I first want to explain to you when I say it's not over, okay? By the way, you don't have to ever use spreads. This is the thing, is like, I don't want to use naked. I'm scared. Oh, hold me. We're not done yet. You haven't seen even half of what the strategy is. The first thing I need to instill into you is that what has transpired since the onset of COVID is the skew that shifted is not just distortion of option premium, it's a distortion of implied volatility from front to back month. Effectively, what the hell does that mean? From front to back month, a distortion of implied volatility? There's actually a whole Goldman Sachs paper written about this too. Effectively, what it means selling longer dated options have better decay rates right now and safer decay rates than shorter dated options. But you can make 50 to 60%, okay, in 28 days and stuff that's way, way far out. You're in the nosebleed seats. I'm selling stuff that is 70. You're looking at a real trade. I'm selling it stuff, it's 70 points out of the money in here. You go, oh, that's interesting. Yeah, can you make 50% in 28 days and assume like really, really minimal risk? We'll talk about puts. By the way, if you're worried about the idea of selling naked, okay, don't worry, we're going to get there. We're going to cover you. We're going to cover you. We're going to talk about hedging. We're going to talk about implied volatility, right? Not just going to leave you out there in the breeze, but the biggest thing about selling naked is margin. Everybody is so worried about margin. I don't have 150 grand in my account to do this. Whatever, man, you can have $2,000 in your account and do this. I'll show you exactly how to do that. By the way, you can sell in your IRA now too. There's no restriction in the IRA. Just because your brokerage firm doesn't let you do it right now, you don't know the right questions to ask. They lifted all the regulations 3 years ago. 3 years ago, they lifted the regulations on what you can do in an IRA. Very few firms now adhere to that. We having fun yet? And of course, it'll work on the put side, but you're getting ahead of me. All right. And again, never use spreads. Spreads are going to kill you in this. What Ultima means, it's taking advantage of this shift of skew. And now the best premium to sell is longer dated premium. Okay. People will eventually come to this. And by the way, I'll show you one thing that's so incredibly important here at TheoTrade. And I'm dead serious about this. Okay. TheoTrade is completely and utterly no holds barred. I'm not here to sell you a class. Okay. You open up a Tastyworks account, you're in. That's how we work. You open up a Magnify account, you're in. That's how we work. When I say we're no holds barred, I show you every nuance of every profit and every loss that I take. That's live position. It's up 9 grand. Aggregate it with both accounts that are over here. So by the way, I have a multitude of accounts here still at thinkorswim. I have a multitude of accounts over here, specifically at Tastyworks. Okay, Tastyworks accounts, these are often positions that I am sending to clientele. But I also let everybody see when I say everything, we are no holds barred. Okay, that means you get to see exactly what I make on a year-to-date basis. Here you go. Okay, by the way, I know that there's a lot in here. This is P&L. Come right over here. P&L year-to-date. Okay, this is both accounts. What's both accounts amount to? I don't have a huge, like ridiculous, I moved a lot of the capital over here. It's $422,000 aggregated between both accounts. It's $422,000. Here's every product that I traded. I'm up 220 grand. The math could not have worked out better today for that. So this is both accounts. If you're up 420, I made 220. By the way, look, this is every product I traded. You can see energy, I'm getting killed in, I'm down 8 grand, right? Almost everything else that we've touched has done fairly well. Okay. I mean, again, it's gold, Jerry, it's gold, but this is completely no holds barred. We show you every position that we do, every position that we're gonna do. We show you as we execute. It's important. I don't think anybody does as open a book as we have. When I say open book, and no holds barred, listen, you're gonna see good years, bad years, okay, everything in between. Everybody does some stupid things in this business. That's par for the course. The way I want you to understand, spiders, it's not the only product you can trade here. Would the same thing be true of something like the QQQ? Of course it would. Let's just use the QQQ. Okay, let's use the 115-day expiration. This is the same example so that we all understand it. Okay, here's an option in the Qs. Here's an option in the Qs. And that option in the Qs right there, let's say I sold that for $1.10. Okay, and I could sell it right now easily. This thing's $1.09, $1.13, guaranteed. I'm filled at $1.10. So I sell it for $1.10. Okay, exactly. You know what? That was 115. Exactly. What? 28 days later, I look back at the exact same option. And again, I just want to reference. So if everybody missed it, I should probably put the exact strike up there. Okay. The option I'm trading in this particular case is the 365s. So I sold it for $1.10. It's the 365 call. 365 call. I sell it for $1.10. 28 days later, okay? 28 days later, which takes me to the October expiration. Those 365s, okay, here they are. They're trading for about 55 cents. Let's say I bought them back at the absolute market at 55 cents. Buying back 55 cents, I'm still up 50%. It's exactly 50%. Okay, and that's exactly what it should be. It's 50%. But most people think that you can't make any money that far out in time. We're so far out in time. People often think to themselves, I should sell short dated options. That way I have to sweat for less time. But the interesting irony is when you're selling longer dated options, you're sweating for only 28 days, but you're not sweating for 28 days. You're so far away from the underlying price. I mean, 365, the Qs are at 294. Okay, they're at 294. Like, how much risk are you really taking over here? You know, it would take a monumental movement, the Fed, the stars all aligning for this thing to go horrifically against you. It could, and will reduce risk, but it's such an important question over there, right? It's just such an important question. And again, this is where people get, you know, all crazy about. If you can make 50%, right, in 28 days, why would you ever sell a short dated option? Because the way I see it, you already made 50% from here to here. That's in 28 days. Do I have to wait another 87 days to make another 50%? And the answer is yes. Then how can selling short dated options ever work? It can't anymore. That's what people don't get. It's selling short dated options is absolutely ridiculous. If anybody mentions it, they're done. It's over. You can make 50% out here in 28 days. Then you'd have to wait another 87 days to make the other 50%. How is that good use of your capital? How about this? How about you wait the 28 days, you make your 50%. And once you do that, you bail out, you do it again, and you do it again, and you do it again. That way you're never carrying anything for long duration. Just hot potato, hot potato, hot potato. You make 50%, move on, make 50%, move on. Average holding period is more than a month, and you're doing something wrong. Right? I want you to think about that. Again, when you're looking at this, why sell options so far in time? Okay. And that's exactly what our example is. You know, typically traders sell short dated option, but that's why people are tuned into this webcast. Like, I don't want anybody to think that this is an infomercial. All we do here at TheoTrade is to give you the right criteria based on what? Okay. It's a think tank, it's research. Okay. Criteria is what we do here at TheoTrade. And what criteria is, it's a recipe. We literally build like these recipe books for specific and exclusive trades like Ultima. But Ultima has been the hottest thing since the onset of COVID. And, you know, we're here 2.5 years later, still talking about the exact same trade that we were 2 years ago. Finally, it's starting to infiltrate the masses. Finally, okay? Questions at this point? Because at this point, everybody turns around and they go, okay, so what about margin? So let's talk about margin. Let's do it. Let's do it. One of the things about margin, okay? You trade very often the QQQ or the what, or the spiders, okay? Have you seen this product yet? The MES. You go, what's the MES? It's the micro S&Ps. I go, well, what is the micro S&Ps? It's basically the same thing as the spiders. Go, huh? Instead of trading the micro S&Ps, because maybe they're a little small, let's trade the full S&Ps, okay? And you go, what is the S&P? It's a futures contract. I'm not ready for futures. It's the same thing as the S&Ps. Look how many like things you can trade on here. This little monkey went to market. Now, this S&P, okay, and these are S&P options on futures. And I'll make you an argument that you should be trading S&P options on futures, okay, in almost all cases, unless you have what is termed portfolio margin. PM is portfolio margin. Why should you trade S&P options on futures? Why? First of all, they apply to Rule 1256. You know what Rule 1256 is? Go look it up, 60-40 rule. So they actually have better tax treatment in taxable accounts, but you knew that, right? No. Oh, there's another thing about S&P options on futures. The margin being held is negligible, okay? I have another one. Day trading margin rule doesn't apply. Why? Because this product is regulated by NFA and the CFTC. But some people are hell-bent, I'll never trade a futures product, okay? Then it's not for you. But I'm telling you right now, if you haven't come to the rationalization, the futures market isn't just picking up contract size, it's dominating right now. Dominating, okay? Why? Because everybody's starting to realize, look, okay, the contract size in here. By the way, there's daily expirations and so forth, but like the Friday contract size, yeah, just tens of thousands of contracts open in here. Contract size is huge now in options and futures. So to give you an idea of an option on future, or in this case, okay, here's a micro. Now, why would you want to trade a micro? A micro option on future, okay, ties up negligible amounts of capital. You can have $2,000 in your account and they'll let you sell this thing naked. Who's they? Tastyworks. They'll let you sell naked if you have $2,000 in your account. By the way, you can also do this in an IRA. So I want to make something very clear. Okay, you can sell, I'm going to get that right. Okay, you can sell calls in an IRA. Okay, minimal margin. You go, no one can sell calls in the IRA. Really? Because here is my IRA. This is an IRA. Okay, see, it says, okay, IRA. Where is it? Oh, I'll have to bring it up over there. Oh, and the actual confirmation will show the SEP IRA. But I wanted to show you right up here is the sale of the 4,600 call. Now, earlier we were just talking about the 460 calls, right? Did we not just talk about the 460 calls? We did. Guess what? I've already sold the 4,600, which is the same thing as the 460s. I've already sold them, okay? And I'm up. So I've sold those a while ago. I mean, this is what I do. And that one I sold only 87 days out. So what are we doing? We're trading Ultima. This is a very small capital requirement. My entire position here ties up $1,000. So you can't say that with a $2,000 account, you can't do this. Of course you can do this right there. It's $1,000. And that margin is in an IRA. If you had a regular taxable account, your margin would only tie up $500. Okay. So this would only tie up $500. Okay. In margin in a regular account. That trade right there only ties up $500 in margin. Is it a small trade? Yeah, but it's still selling premium. Like we still circumnavigated, any of the restrictions out there. I think it's important. Okay. It's really important that you guys understand that. So by the way, spreads right now, spreads don't work. If you're selling spreads, you're going to find out you're going to make money, lose money. In fact, that's exactly what we're going to talk about, the 90% probability and the 10% hammer. So we're doing trades right now that have this incredibly high probability. And again, I'm going to lay all of this out for you. 90% sounds great, but 10% of the time, I want you to think to yourself, what happens when this position goes awry? Like what happens when you wake up and all hell breaks loose? Because that's what we're going to talk about. All right? I think it's incredibly important. It's easy when I explain to somebody, hey, you're going to make 50% in 28 days. Okay. And it's going to tie up negligible margin. And you don't have to worry about a day trading margin rule. Even though I'm not day trading, I want you guys to know how to circumnavigate that rule. It's in everybody's best interest. Okay, I'm sick of that. I see these forums, I constantly see forums, and I literally have to almost gag myself from commenting on them. And I'm talking about Reddit forums, and I'm talking about Facebook forums. And these people are like, that damn day trading margin rule is screwing me. I'm like, dude, it's 2022. Wake up and realize ain't no margin restrictions. There hasn't been. The NFA, any futures product, has no margin restrictions. That's why people traded crypto. Why'd you trade crypto? It didn't have margin restrictions. Neither the S&P options and futures. Okay, they don't have margin restrictions. Now, I can't trade the spiders. Well, you can't trade the spiders, but you can trade something that mirrors exactly the spiders, and it's got massive volume and great markets. Works, right? Anyway, I get frustrated with that. But 90% of the time you're going to be right. But what happens if the 10% of the time you're wrong? Whoosh, you rip your face off. When you're really trading high probability and you're wrong, you're going to get hammered. Okay. Some of you over the years have experimented in selling premium. Those of you that have experimented in selling premium, there's always somebody in the crowd that's taken a class on iron condors. How many people have taken a class on iron condors? Just Y for yes, N for no. But if you've taken a class on iron condors, you paid $500 for the class, and they teach you, go on and put on this iron condor. By the way, if you don't know what an iron condor is, you sell a call, sell a put, you buy a call, you buy a put. It's like the Macarena, right? Sell a call, buy a call, sell a put, buy a put, yada, yada, yada. And it's a way out of the money, high probability strategy. And it looks, the risk graph kind of looks like this. Anyway, nobody wants to admit this, that they've sold iron condors. Come on, people, admitting it's the first step today. Anyway, you go out and sell the iron condor. And what the iron condor allows you to do is have a 90, 95% probability. But what people don't realize in the iron condor is you're risking a buck, but you could end up losing 10, 15, even $20. So the first time you do the iron condor, you do it in the spiders, you make money. You're like, yeah, I made money in the spiders. The second time you do the iron condor in the spiders, instead of doing one contract, the second time you do it, you go, I am Captain 5 lot, 5. So you do 5 contracts in there, right? In the spiders. The third time you do the iron condor, you've made money now twice and you're like, I'm a genius. It never occurred to anybody that you're doing a trade that had a 90, 95% probability. They just think, I'm a genius. Okay. Are you smart or are you just doing a high probability strategy? Now you're questioning yourself. Okay. So on the third month, you use the SPX, and the SPX is 10 times the size of the spiders, but you haven't had a losing trade. So what do you care? So you go in there and you do a SPX iron condor. And guess what? On the third month, you made money again. On the fourth month, you ante up and you do 10 contracts in the SPX. Now, I'll remind each and every one of you, 10 contracts in the SPX is the exact same thing as having 100 contracts in the spiders in just a low time of 4 months. Instead of trading a 1 lot in the SPY, you're trading 10 lots in the SPX. And the fourth month after you place the trade, oh, train wreck. And in that fourth month, you end up losing half of your entire account. Okay. And people are listening to this right now. They're like, holy crap, this guy's actually seen my account. I have, because for 15 years, I had access to all the client order flow. Who haven't seen this movie before? I can tell you every instance of iron condor traders getting completely wiped out over a 15-year period of time. Every single instance of it. Oh, the best one was in 2007, the Chinese yuan currency devaluation of 2007. And it was in February of 2007. Everybody lost half their account in an iron condor in 5 minutes. It's just ridiculous. You see this stuff again and again and again and again. Nobody ever actually changes it. Listen, you've got to know how to do this, okay? And we're going to show you how to do this properly. Now, after people take that big hit in an iron condor, then they always think to themselves, they pay another $500 and they go to another class and they're like, I can fix it, okay? I'm a total cynic when it comes to fixing trades, totally cynical about fixing trades. 15 years of watching people try to fix trades. By the way, fixing trades is the same thing as taking more good money and shoving it down a bad hole. Anytime you're fixing a trade, it's more risk. Unequivocally, there's more risk. You can't fix a trade without more risk and more transaction costs. Some fixes, they might work. Fix may work, but the very notion of fixing a trade is, again, it's throwing more money down a really bad hole, okay? So keep that in mind. You got to throw trades out like yesterday's trash. If you took a car and you drove it off of a cliff, hopefully you're not in it, but took a car and drove it off a cliff and then brought that car to a body shop, what are they going to tell you? They're probably going to tell you it's totaled. It's a complete and utter hideous loss, right? I'm going to tell you the exact same thing about your trade. Listen, you need to learn how to do this right. You learn how to correct good trades gone bad, but we're not in here to fix trades. We're in here to design a position. We're going to teach you position structure. So let's get into it. We okay? Because this is where things are going to get deep. You ready? Just making sure you're ready. I'm watching the chat over here. Yeah, it's quiet. Just making sure everybody's ready. Okay to go. Okay to go. All right. One of the first things we're going to talk about as we discuss and kind of breach our way into position structure. And people are asking about calls and puts. So let's go look at the live market for just a second. All right. Here's the market. And I'm going to bring up none other than the spiders. Spiders are trading right around 390. Okay, they're about 390. Now, if you went 115 days out, I want you to see something crazy. If you were to sell puts this far out, look at this. I am all the way out here at the 290 strike and still able to collect $2. $2, right? That's crazy business. So I just want to show you how much premium is out there. So let's come in here and let's say, categorically speaking, we're going to talk about the spiders a little bit. All right. Make sure I'm going to change color so everybody can see it. So here's the spiders. And let's say the SPY is trading at 390 and just round it. You're going to go out here and you're going to sell calls. Okay. What did we sell in terms of a call? We sold what? 460 call, collect about $1 on it. Consequently, we could also turn around and sell 290 put. 290 put's going to be trading for double. Okay, puts are actually going to carry way more implied volatility risk, but you're going to carry $2 here, $1 here. The way people say, if you're going to sell calls, why should you also sell puts? I have a great reason. Doesn't tie up any more margin. Doesn't tie up more margin. If you sell calls naked, okay, or you sell puts naked, why wouldn't sell the opposing side? It doesn't, because if you think about it, the market can move higher, the market can move lower. The market can't move higher and lower at the exact same time. What if the stock splits? It splits down the middle. It can still only move up or down. Okay, don't be cute. Anyway, you're going to go out and sell a 290 put. And before you know it, you're probably going to turn around and sell like a 300 put and be collecting another $2. And you're going to sell, okay, I don't know, let's get crazy and say a 280 put. All right. And then up here, you're going to sell 470 calls. Before you know it, you'll be selling the 450s, right? This is about inventory management, but just time out. So I've just gone out and I've sold what? Naked. This is totally naked. So I sold 450s, 460s, 470s. I sold 300s, 290s, 280s. I've sold 6 different options totally naked. What's going to happen to me? You tell me. You tell me. Don't let me finish the sentences. You tell me what's going to happen to me. If I go out and sell naked on both sides of this marketplace, okay, what will eventually happen to me? Anybody? Dead silence. Come on. This is where I actually, okay, I think Ian said it pretty good. You're going to get killed. You're going to get burned. You can say it. It's okay. I'm not here to sugarcoat anything. As I said, I'm completely no holds barred. Okay. I don't care whether you like it or not. It's this is trading. If you do this, eventually you die. There's no question about it. If you do this and just sell naked on both sides, eventually you die. And when I say eventually you die, I mean, listen, everybody dies. No. You're going to a financial grave here, a serious financial grave, because eventually you're going to wake up one day and we ain't going to be trading at 390. You'll have a Google announcement, swing and the miss. You'll have something come out where it's so hideous, okay, that the marketplace won't open at 390. The marketplace will open right here at 300. It's called a gap. By the way, we can't gap quite that far. You can only gap 7% now. 7% is the largest overnight gap. So you can lose 7%, but the volatility will explode. Okay. Could you imagine if we moved down that quickly, how ferocious of a move it would be? And this is where people say, but I had a stop order. Stop orders can't save you. Stop orders will only hurt you. It'll stop you out of the position. What you have to do in this case is you have to use a hedge. Okay. What is a hedge? Enter the hedges. Hedging is an evil necessity. And I say that because, well, it's an evil necessity. Like it is what it is. Hedging is a sacrificial lamb, all right? If you don't know what a sacrificial lamb is, sacrificial lamb is just as strange as it sounds. If you, every couple of weeks, you got to take a lamb and you chuck it into the volcano. That is a horrible analogy, but I think you get it. No lambs were injured in the making of TheoTrade. But you get the analogy, right? So you take this lamb and you chuck it into the volcano. Why? Because people believe the volcano won't be pissed off at them if you chuck a lamb into the volcano. But it's just a sacrificial lamb. But what a hedge is, okay, is a necessary evil to operate in this business. Okay, what we want to make you into and what you need to understand, okay, I want to make you into the Amazon, okay, of inventory management. We're teaching you here to build inventory. What inventory means is, imagine you're a person, you go out and you sell apples for a living, not Apple computers, actual apples. You sell you sell apples for a living. So what's the key to selling apples for a living? Okay, trying to churn as much inventory as possible. Okay, the more apples you can make, maybe you make 50% on every single apple. Okay, so you make 50% on every single apple, but some of those apples are going to be rotten apples. Some of those apples, okay, are going to need a little bit of a hedge. Like you're going to have to store those apples somewhere. So you store your apples in some kind of a construct. We're going to do the exact same thing. The whole key, though, is get through as many apples as humanly possible, because the more apples you get through, the more times you're making 50%. Does that make sense? But the necessary evil is, what's your overhead? What's your overhead of being in the Apple business? Okay. Well, you're going to have to go out and do some advertising, do a little bit of this. Every business you get involved in, there's a necessary evil, there's necessary overhead. This one, your necessary overhead, okay, obviously you have some commission costs. The commission costs are negligible. It's cost of doing business. But the cost of operating here, okay, the cost of operating here unequivocally is you're going to have to hedge. Okay. You're going to have to hedge. And what we're going to do is we're going to layer in a hedge. And we're going to put the hedge in there so that when the market crashes, okay, it's going to open up an umbrella and let you go into safety. I mean, literally, it's going to be like poof, like a parachute opening up, and it's going to actually save your proverbial behind. You want to see it? Let's do it. Let's actually enter the hedges. So when I say enter the hedges, not being facetious over here, you can't operate without them. And anybody, by the way, that thinks that they can operate in premium sales without a hedge, okay, don't dilute yourself to that crap. I can wake up in the middle of the night and move faster than the market. No, you can't. You can't, okay? The one thing I guarantee you is the market can move much faster than you'll ever be able to react. You can't use a stop order because what happens if the market goes down 7%? Okay, it's called limit down. Limit down, there's no stop orders. Okay, stop order is useless at that point. I got stopped out and then we rally back. Some people remember them in the the flash crash of 2010. But again, if you want to operate in this business effectively, you'll learn this, or you're going to die trying. Okay, enter the hedges. There are going to be 3 primary hedges we're going to use. The first one in here is known as a risk twist, or better known as an RTS, risk twist spread. Second one is a VVS, which stands for VIX vol spread. The third one in here is a gamma iron. Okay, for those of you that even know what gamma is, all right, the gamma is the risk that you actually assume. How about we have a trade to offset that gamma? So there's 3 different types of hedges. Let me just explain the VIX volatility spread, because what I'm going to do is I'm going to build some inventory. But right here, I'm going to layer in, okay, a VIX vol spread. For those of you that know what the VIX is, let me ask you a question. If the market goes down, the VIX goes where? Up. The VIX will explode higher. Does it always explode higher? To some degree, yes. But if the market crashes, VIX is implied volatility. It's the S&P 500 implied volatility index. So if the market goes down, the VIX goes up. When the VIX goes up, how about we place a very, very small trade in the VIX, just very small. And that very small trade, if that volatility starts to shoot up, that very small trade will poof, explode in price. And that explosion in price is more than enough to cover a significant, not all, but a significant amount of my downside risk. Okay, this is where people, they get, don't deer in a headlight on me now. Just understand conceptually. I have this tiny little trade over here in the VIX, tiny little trade in the VIX. That tiny little trade in the VIX, okay, is the sacrificial lamb. It is the hedge. You can't operate without it because, one day you'll wake up and markets will not look good. Like, it's not good today, but this is nothing. It's during trading sessions. We've been orderly. If you remember back to the beginning of the COVID crash was serious. We had days we were down 10, 11%, puking out, it's brutal. Now, multiple nights we hit limit down. We haven't even experienced that yet. So here's the SPY. Okay, whoops, here is SPY. And that SPY is trading right at, let's call it 390. So I'm out here and I'm going to sell, the 450 call and collect $1. Then I'm going to sell the 460 call, probably collect another $1. And I'm not doing this all the same day. I'm just, just kind of showing you what inventory looks like. Then I'm selling like the 470 call and collecting $1. Okay. Over here, I'm going to sell, for instance, the 290 put, collect $2. And out here, I'm going to be selling, for instance, the 280 puts and collecting another $2. And before you know it, the market sells off a little bit more. I'm going to be selling the 270 puts, collecting $2 for it. Meanwhile, I've got my hedge on. And the reason I have my hedge on is just in case this marketplace comes down and comes down fast, that hedge is actually going to save my proverbial behind, because the hedge is going to open up. okay? And calls like literally like a parachute to open, more than enough time to mitigate my exposure. Never the use of a stop. Stop will be the death of you. Stops don't work in the middle of the night. VIX vol spreads do. On the other side of this, what happens if the market rallies huge? If the market rallies huge, we actually can take advantage of what's called a gamma iron. A gamma iron is actually the inverse of an iron condor. And if the market goes up, there's no way for you, okay, to not make money in the gamma iron before you actually taking a loss on any of these calls, meaning that you'll make money on the way up. And then, and only then, could you start losing money on the calls, okay? Hedging is a necessary evil. It is the construct. It is what is like, it's an evil necessity to do business in this marketplace. And these are what we call active hedges. When do you have hedges on? You always have hedges on, okay? This is selling premium. Structurally speaking, it's very complex. The only complexity in here, okay, is how to get the hedges on. The only complexity in here is how much hedge for how much premium do I sell? Can I sell a bunch of this crap and only have one hedge? Yes, but you still have to know how much. If you have a $2,000 account or a $10,000 account or a $2 million account, it's all par for the course. Okay, that's fine. I mean, net and all the accounts I'm trading, it's well over $1 million. Okay, and I'm selling premium. And again, I just show you, positions. As I said, what we do here at TheoTrade, this is completely no holds barred. Right? I've got premium selling over here, which is going swimmingly today. It's up about 10 grand in that account. I've got premium selling over here in Tasty, okay, which is up. By the way, this is what we call the micro account. And the micro account, this is designed for people that have like a $2,000 account. I'm not tying up more than $1,000 here and another $300 in margin for another position, okay? And net, what are we? We're profitable. Like that's what matters in this business. It's profitable. All of that is predicated on what goes on here. It's selling options premium. We comfortable? We good? Okay, because now we're going to move on over here. Listen, this is why you want to do this. You can do this with as little as $2,000 in your account. You can enhance existing positions. If you have stuff on right now, you can probably sell premium against it, not like covered calls. It's completely different. Okay, so oh, I like that. Somebody said, "What's the VIX hedge?" Okay, yeah, no, we get into the nuances. Again, I only have enough time today to kind of preview this. And today, there's no pitch. Listen, you guys kind of know if you want to learn how to do this, you open a Tasty account or you open a Magnify account, you're in. And when I say you're in, you get everything that we do here at TheoTrade for the next 90 days. And after 90 days, if you want to do it again, then and only then do you have to pay. It's like $297 for the next 3 months. Now, I don't mind telling people that because there's nothing in this industry. You can go out and pay $30,000 in stock market education. It'll pale in comparison to what we're doing here, okay? And we're doing it basically for you opening up a Tastyworks account, or we're doing it for you opening up a Magnify account. So you never need to buy or sell the stock. It's a really high probability of success. And one of the most critical things is you could be wrong on market direction and still produce profitable trades. Like, I don't think I can stress this enough. And again, it's in my best interest. Obviously, we want more clientele at TheoTrade, but you need this in your life. It's in your best interest. It's in your best interest simply because what do you think this marketplace is going to look like for the next few years, right? Well, I'll tell you the next 6 months, they're going to raise interest rates, they're going to pause, then they're probably going to look at it and go, oh my gosh, the economy is falling apart, which has already started. By the way, if you think that we're towards the end of the sell side right now, I'll make the argument you're at the beginning. You're not even at the end of the beginning, you're at the beginning of the beginning because Walmart just warned last night. That's the only it's the second warning that's come out of Walmart, but you haven't even seen advertising spending get cut back yet. I want you to think about that for a second. Who's one of the largest advertising firms to a firm like Google? Walmart. Yeah, people are not thinking right now very clearly. Like, who do you think advertises? Verizon, AT&T, Walmart. Have they cut their advertising budgets yet? It's only a recession when you know they're cutting the advertising. I hate when they're talking about like GDP has to be contracting in the consecutive quarters. Forget that definition, okay? We haven't even begun to see sell side yet. The one reality of this marketplace, okay? If you're picking direction, you're gonna get ripped apart. It's the one reality. I don't know if that's gonna be for 6 months, for 9 months, for the next decade, but you need this in your life. You're gonna have to survive volatility. Selling premium, potentially bring in consistent returns while minimizing the risk. You want to learn how to do this the right way. We're going to talk about criteria. Before that, we're going to give you a few live trading examples. Listen, variations of all of the following that I'm about to show can be done with as little as $2,000 in a funded brokerage account, and this can be done in a retirement account. Just so you guys see, listen, I've already talked about, don't worry about margin. Don't worry about margin. We have smaller portfolios exclusively. In fact, the trades that you're seeing right here, these are trades that we text out to you, okay, our clientele. We text you trades, and when we text out the trades, you're more than welcome to follow along in the trade. Just to give you an idea, I'll show you a trade that I did. Here, let's actually cruise over here and show you XHB. By the way, I'm just gonna give you for what it's worth. I've got the XHB trade on a few times here, but to show you how big we've become at TheoTrade, our open interest kind of stands out, wouldn't you say? Take a look. That's the XHB. Look, there's 6,000 contracts here and almost 6,000 contracts here. Who is that? You're like, that's us. Okay, that's TheoTrade. To give you an idea, I said there's 6,000 clients. They're all trading. You know, maybe they're only doing one lots in here. And by the way, that's not the account that it has it in it. Okay, here's the XHB trade. The XHB trade's still down 30%. I don't mind saying that. I've got a whopping 5 lot on, but I will tell you something about these trades. Okay, we're not just active. We're one of the biggest players in the entire marketplace right now. When we trade inside of the S&P options and futures, okay, clientele have these positions on. The open interest is freaking huge. Okay, we're now even trading inside the micros. When I say the micros, here, just take a quick glance. The micros, this is the small portfolio. This is for a newer client. Now, we have lots of newer clients. Here's going to be smaller size. When I talk about open interest here, okay, this is our smaller group. Our smaller group, look, that's my position. It shows I'm -1. There's 1,000 contracts open. Okay. Do you notice that that's the highest open interest in this entire product? By the way, we warn market makers before we actually come in here, just to show you. Take a look at this. It's another 1,000 contracts that are open over here. Because I want you guys to understand that when I say we're no holds barred, everything we do here at TheoTrade is completely and utterly transparent. Okay, every hedge, every play, like every single trade. Here, look, here's our hedge. This happens to be a hedge. Ironically, another 1,000 contracts. Okay, we are big enough to, in fact, even move marketplaces from time to time. So we have to trade the most liquid products in the entire industry. So variations of all the following trades. You don't have to follow the bigger portfolio. Follow a smaller portfolio. $2,000 in a funded Tastyworks account, and you can do this inside the retirement accounts. All I'm going to do is just run through, like here, we're on slide 35. We're going to be on slide 2, like almost 200 in a minute. Okay. This is a Tesla short call. Now, all I did is I took my brokerage statement and I just copy and pasted. This is the opening trade, the closing trade. Look, it says to open, to close, the exact strike I traded. I used Tesla as the first example in here because I thought people would be amused by that. But frankly, I'm not a big trader of Tesla because I think it's generally speaking too volatile for people, but it's a 58% return. Here's a bond short put, 57% return. All I'm going to do is just scroll through here. By the way, I trade bonds. Some people say, I'm not familiar with bonds. That's okay. Do you realize, again, every trade that I'm showing you, this is text to clients. And you go, I don't have a phone that can receive text. Well, you can actually have any mobile device you want, okay, whether it's this or, whether I keep all my Apple devices very close. By the way, I don't have like the $1,000 iPad. You got to get the crappy Walmart iPad. And after a year, you just hand it to a child, okay? We have our own mobile app, and our mobile app allows you to access all of the trades, even if you can't receive text messages. So here we go. This is everything I've done over the last 18 months. You ready? I'm just going to scroll through it real quick. So these are all the trades, all individual trades, and you can see the returns. You'll see the occasional loss in here as well. I know I took one here, 19% loss in IWM. Most everything is going to be right around a 50% return. You want to know why? Because their criteria calls for a 50% return. Now, I'm all the way back in 2021. You go, why are you so far back in time? I'm getting there, people. What do you think I'm showing you here? I'm showing you every trade that we've texted out, okay, in this particular portfolio over the last approximately 18 months. And the more experience you get, look, then I start scaling up. Now I'm talking about ES short put, ES short calls, okay, QQQs and so forth, bond short calls, bond short puts, all right? all of it's in here. Then I actually do the occasional Christmas tree trade. The Christmas tree trade, this is a high impact trade. This is done for a $21 credit, closed for $3 debit. This is a serious premium seller's delight. QQQ, TLT, all right, trading bonds again. Again, you'll see the occasional Christmas tree mixed in here. Sweet, 92% return on that one. Again, phenomenal returns in some of the Christmas tree spreads. Bond short put, just scrolling through. This was actually a Christmas tree trade, but we actually hit the middle of the ratio. It's a $4,000 profit on a 1 unit trade. So, which is just phenomenal for a trade that this is only 1 unit worth, and we had a $4,000 profit. Okay. I'm just scrolling through here. And again, you're not going to see a lot of losses in here. And the reason you're not going to see a lot of losses is the mitigating exposure. Another Christmas tree trade. Okay. Here we are in 2022. And again, we're getting much closer. No time, no problem. By the way, you'll notice I kind of ended here on 517 and haven't updated it since. I haven't had bad trades. Okay. I just got to the point where I'm like copying, pasting, but I have no problem in showing you. You want to see the portfolio from that point forward. Let's go actually in here. This is what the portfolio looks like. So when I say the portfolio, this is the Ultima TheoTrade portfolio. Okay. All it is basically a spreadsheet. This is all of the opening trades. This is open trades. It's the underlying, it's the status to open, close, 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 close. Okay. Obviously, you can see lots of bond trades in here. So I'm not giving you so many trades that you can't possibly stand it. Just in like June, 1, 2, 3, 4, 5, 6 trades in June. Some of them, okay. By the way, every single trade from June, other than this little monkey right here, has been closed. By the way, there's opening trades in here, and you can also look at closed trades down below. You can kind of match them up. You'll even see when I say everything's no hold barred, you know what that means? Okay, that means I traded on my iPad. All right. Okay, it means I traded on my iPad, which I do. I'll sit there and trade on the iPad. I'll sit in front of this screen and trade on the iPad. Again, when I say it's no holds barred, you get to see every single transaction, opening, closing, win, loss, hedging transactions. It's all in here. Okay. And that's what we're designed to do with TheoTrade. Again, everything is showed here. This results in this portfolio are great for part-timers. I don't want you to think that you have to sit in front of your screen all day. What our members are saying, I'm up $80,000 since January 1st, 2022. I'm really short. Okay, so having hold my nose when the market rallies. Otherwise, I'm just rolling puts down and rolling out and close. Okay, for spreads at $1.55 times. Anyway, you guys get the point. Characteristics of Ultima premium selling. The attributes of this are undeniable. You're not buying or selling the stock. The risk, we're actually going to help you tailor it to your comfort level. You're never going to use a stop order. The probability of profitability is high. The probability of profitability is incredibly high in here. It's the perfect strategy to enhance a stock portfolio. Obviously, it's designed to build returns in an account, but also those micro S&Ps and the S&P options on futures and bond options on futures allow you to trade this strategy in any account size. It's never going to be an excuse. If you have a $2,000 account, you can do this. And it's exactly what I wanted to show. Building a portfolio of options. Do not let the options portion of this intimidate you. Okay. Selling premium can be done for minimal credits, minimal risk. But selling premium can also be this massive power saw. Like you have to learn how to do this properly, right? You got to learn to use that hedge, because if you don't use the hedge, you're going to lop off a couple of fingers. So the hedge is extremely important. You can sell premium and minimize risk. Again, if you have limited experience in placing option trades, as I said, do not let the options portion of this intimidate you. Okay. This is TheoTrade. And the reason I wanted to bring up TheoTrade early on over here is I want you to see, so there's an Ultima portfolio. We just showed you that a moment ago, all these different classes and, this home area. Okay. Close all that up. Okay. The one thing I want you to see, the start here menu. And the reason I want to take you over to the start here menu, okay, is when I click on that, this is where you start. If you know nothing about options, options 101, options 201, we get you started, we get you ramped up. So that's not going to be a fear. We have, okay, what you need from absolute novice to some of the most extreme trading strategies. They're all incorporated into what is TheoTrade. And by the way, this is live right now. So if you want to see what TheoTrade looks like, this is a chat room where you can watch. This is a day
Create a line in the sand for yourself.
Okay, this is a day trader. I just turn on this volume for a second. This is Tony Rago. Trades Nasdaq futures all day long. All he does is calls out setups all day long. but he's live for an hour inside of the chat room right now. So listen, everything we talk about here, at TheoTrade, it's all about a recipe. Okay. And you wouldn't bake a cake without a recipe. So why trade without one? And I say it's all about a recipe. Okay. We show you how and when to sell premium. Okay. It's a matter of a few hours. You do have to sit in front of a screen for 5 hours plus to watch a class. I don't want you just to follow trades without having some of the background knowledge of what you're doing. It's just, that's not fair. Like, would you want to go out and fly an aircraft not having some definitive instruction on what an aircraft is? Don't worry, I'll just talk you through it while you're in the air. Okay. Watch that 5-hour class before you do this. This is what you need to know to successfully sell Ultima Premium for a living. You got to know what underlying stocks to do this on. Obviously, I've shared those with you. You have to know what volatility to seek out. Too much volatility and you're dead. Okay. Not enough volatility and you're dead. Like you just, I would never sell premium in something like Walmart. You can see exactly why today. What options expiration do you select? Look at an option chain these days. You want to see something really, really crazy? Go look at the spiders. Okay. Look how many expirations. There's 1 day, 3 days, 6 days, 8 days. Okay. Look at all these expirations. We're going to dial you into exactly what one you should be selling. We're going to tell you what the option delta that you should sell. We're going to tell you what you should buy against your position, meaning the hedges. We're going to tell you how to build a position, meaning like how many hedges for how many options you're going to sell. You're not going to need a large amount of capital to do this. I've covered that, a dozen different times in here. We're also going to talk about, excuse me, the right amount of risk for you. One thing you'll learn in this business, capital is not linear. You don't trade a $2,000 account like a $2 million account. We're going to give you the percentage of returns and what they're supposed to be. Not just close it for 50%, but what should you try to make with Ultima? How do I protect myself from crashes when selling options? We're going to show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Trading is all about answering what ifs. Like what might be a good candidate for you to sell premium and what's the correct options expiration? How much capital do you commit? Which strike options do I sell? Which options do I buy? How can I limit my risk? TheoTrade has those answers. So when we say we build recipes with definitive criteria, what we actually build is a checklist for each strategy, okay, and each unique variable you're going to encounter, right? What that checklist amounts to and the whole idea behind it, it's like, again, I was just talking about flying a plane a moment ago, but if you're going to go fly an aircraft, when you get into it like a 737, the first thing obviously the pilot does is goes through a highly detailed checklist. It's a pre-flight checklist. Then, okay, we have a checklist not only to get you into the strategy, but the checklist in flight. When you're actually in these trades, what if the stock goes up? What if the stock goes down? What if it crashes huge? Okay, it's all about answering, all right, the questions, the right probability for the trade, how many option contracts, when do you close your premium sell? What if we sell off big? Do you bail out of the trade? If we rally massively, can now fix a losing position? It's about how, when, why, at what price. I'm telling you, it's just the beginning of the variables you're going to face when selling Ultima Premium for a living. And you can read about what selling Ultima is. Like you could read about selling premium till you're blue in the face. Maybe some of you even had to build a few trades, but you need TheoTrade's recipe for success. That's what we do here. That's what we give you, okay? That is what our experience brings to the table. Everybody that works here, and there's 8 full-time instructors, including myself. We each bring a minimum of 15 years of experience, okay? That's before ever coming here to TheoTrade. This is just me. I started trading in 98, but 20 plus years trading experience, access to client order flow for 15 years, viewed and studied millions of trading accounts. And one of the things I put a lot of weight into is I got to see everything that you did for 15 years. Believe me, okay, we know how exactly and precisely how to build that criteria, okay, for you to walk through the gauntlet of the marketplace and have success on the other side, right? Criteria becomes your recipe for success. And we spent years fine-tuning Ultima, the trade set up, the criteria. And when you approach the section on criteria, you follow the steps to build a trade. The Ultima Income Generator course, it's a 5-hour course. It's archived. It's available immediately. Open a Tastyworks account if you want it, or open a Magnify account. I'll cover that in just a moment. So there's a 5-hour course. It's ready to go. It's in the can, right? Meaning that you can start streaming it the moment that you open the Tastyworks account and fund it. We have to verify the funding for the account, okay? After we verify it, when it's all said and done, it could take you up to a week. It's frustrating, but it takes a little time to fund and verify the funds in the account. You can then access the 5-hour course, okay? It's archived. It's available immediately when you're ready. And the class slide deck, you can download it. The actual what's taught in the class, here's the curriculum. You're going to learn how to build a portfolio of high probability trades to generate monthly returns. You're going to learn all the detailed entry and exit criteria for Ultima while keeping risk at a minimum using hedges. You're actually going to discover option Greeks and learn how to manage risk from one number. You're going to learn probably my favorite part of that class. You're going to learn how to use a risk array in order to visualize your profits and risk before markets ever move. Okay, you're going to learn how to allocate in a way that actually reduces risk. So we call it diversification through capital allocation. You're going to talk about, risk mitigation techniques. So you're going to learn things like risk twist spreads and VIX volatility spreads. So you're never going to be caught off guard. You're going to learn, of course, how to sell premium in small accounts or a retirement account. Do not think that what I'm talking about doesn't pertain to you because you have a retirement account. I'm doing this in the IRA, and it's extraordinarily minimal risk in there. So here's open a Tastyworks account now, and I'm going to show you to open a Tastyworks account or a Magnify account. Bear with me for a second. If you open a Tastyworks account, you get 90 days of TheoTrade membership, okay? It's totally on the house. Plus you get $200 in stock. That's from Tasty, okay? In addition, you get a lifetime subscription to the small exchange. If you have no idea what small exchange is, it's a newer futures exchange, okay, that allows, they have really innovative products, everything from new products to trade the metals like gold and silver. They have new products for interest rates. They have new products for the S&Ps. You can actually even trade what's coming next in there is crypto futures and crypto options on futures. It's phenomenal. What the small exchange subscription does, it gives you half price exchange fees for the rest of your life. It's $100. We fork over the $100 to them. Last but not least, you get a free ticket to Brandon Chapman. It's a 6-week beginner's guide to Ultima trades. Okay. Basically, it's to take you back. Now you can watch the Ultima class, but Brandon's class is going to solidify that for you. The next class starts September 12th. Okay. The last time we did this, we filled up positions for his class like immediately. I mean, it was over. We had to add another one. It starts September 12th. Okay. All of this is yours. And again, you don't have to fork over a dime. You don't have to give us a credit card. There's nothing of that kind. And I want you guys to know that. We open up a TastyTrade account, a Tastyworks account, and you're good to go, right? Go to TheoTrade.com/Tastyworks to initiate the account opening. If you already have a Tastyworks account, you could, excuse me, you could do the same thing by opening a Magnify account. What's Magnify? Magnify is a registered investment advisor. Really what Magnify is, it's a technology firm. It's a technology and firm designed exclusively, for investment. 90 days of TheoTrade membership, totally in the house. You get access to a ton of tools over on Magnify, in addition, you still score the mentorship with Brandon Chapman. So again, that one is TheoTrade.com/mag. Please, it's one or the other. Okay. And we incentivize you to do both because some people, they're like, hey, listen, I already have a Tastyworks account, man. That's not fair. So guarantee you don't have a Magnify account. This is a relatively new company. By the way, this is a new company. They just took in $187 million of funding in February during one of the worst markets in the history, of the beginning of the year. These guys took in $187 million in new funding. So not only are they going to survive, these people are going to thrive. This is a big firm. It's going to be up and coming. In addition to all of this, you're going to get the inflection point spread class. This is a new class that teaches you how to place the premium sell and the hedge all in one transaction. Okay, class slide deck, it's yours. You get to watch this as well. You're going to learn to sell premium and hedge in one transaction. High probability positions that generate monthly returns, regardless. regardless of the capital in there. All right. And it's really, really critical. All right. That you guys understand that, again, to generate monthly returns with high probability, what's cool about the inflection point spread, you don't have to worry about a VIX fall. You don't have to worry about a risk twist. It sells premium and hedges in the same transaction. If you want to see it, here is a very small, okay, inflection point spread underway. That's the hedge. This is actually the premium sell. So you can kind of look at both of them. And the irony is both the premium sell and the hedge are actually up. So it's a really, really viable alternative for those of you that are a little bit newer to this business. So you're actually going to learn how to do the inflection point spread in one transaction, keep risk at a minimum, learn to analyze these trades and find how the inflection point spread, IPS is what we call inflection point spread, can help you safely allocate for any size. Again, go to TheoTrade.com/Tastyworks or TheoTrade.com/mag. Mag is M as in Mary, A as in Apple, G as in George. Mag is just short for magnify. This is a short link that gets you in there. What our members are saying, because of Theo, I closed my entire portfolio with profits. Okay. 0 loss, I'm all cash. Love it. Okay. I mean, that's big in a year that most people are down 20%. So TheoTrade goes though beyond just 2 classes. We go beyond 1 class or 1 indicator, right? We get that people want everything you trade and invest at one place and at one price. So this is everything that's included in TheoTrade. And you guys, again, you open up the Tastyworks account, you open up the Magnify account, that's completely up to you. You get access to everything I'm talking about. This is a quick start beginner's guide, which is, as I said a moment ago, this is where we go in and we talk about like a quick start. When I say the quick start, here, let's go in and open this in a new link. Options 101, options 201, right? That's the quick start beginner's guide. Number 2, you get access to over 100 different classes. When I say that is when you have access to TheoTrade, okay, this is TheoTrade, but we give you access to everything we do at TheoTrade. And everything we do, it's every class that we've ever held. We have option classes, option newbie classes, technical analysis, futures, stock, day trading, hedging, okay? I mean, the library in here is completely comprehensive. Just option classes. Listen, the reason I'm bringing up option classes, that's my baby. We have Z spreads, inflection point, income accelerator, Ultima, gamma irons, right? Black book spreads, okay, straddle class. Some of everybody's favorite class, of course, is of course the earnings classes. Like people love the earnings classes. You want to learn to Butterfly's Guide to Weekly Returns. You guys, I'm telling you, this is just a smattering of the classes that we offer. You get access to every one of these classes. When I say it's a class, want to see what it looks like? Let's click on it. This is the inflection point spread class. Okay, that's the date that I actually held the class. All right, so it's March 1st. So it's still really, really recent. It's relative, right? You can download the entire slide deck, but the class itself, here it is. So if I click play, I am Don Kaufman. You are watching Inflection Point Spreads, an Ultima premium selling strategy. So it's part of Ultima, and that's the series, but you get access to all of this from day one. So all of these classes. In addition, you get access to our chat room. Now our chat room, okay, over a course of any given day, we have over 2,000 people going in and out of the chat room. We do live trading. We broadcast for 6.5 hours of every single trading session. We do text push notification. We have 5 different portfolios. There's daily coaching sessions. One of our instructors is also doubles as a professor at DePaul University in Chicago. So he does most of our continuing education. And probably one of the things I put the most weight into, and again, this is all included in it, we answer your questions via email. If you have a trade-related question, you don't have to hesitate. You can ask us. It's trade-related questions. We'll answer them via email. That's all part of it. That's bonus number 3. Here's the instructors: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller, Tony Rago, Blake Young. Everybody has their genre of trade. We have 3 CMTs on the crew. Brandon Chapman, okay, is a CMT. Corey Rosenblum is also CMT, and Jeff Bierman is a CMT. Okay, that's a big deal. If you guys are not familiar with CMT, that's fine. Okay, chartered market technician is not an easy designation to obtain. This is the crew kind of working at home, all on Zoom. access to 59 proprietary indicators and scans. It's all part of it. Any code that we write in terms of scans or anything, we don't sell it. We just give it to you. Okay. Many of them SPX. I put a lot of weight in SPX expected move. TheoTheo live portfolio. This is Ultima premium selling. You get access to the portfolio. It's full disclosure on all trades, opening and closing. We also have the TheoTheo small portfolio. Again, the portfolio itself looks nothing more like a spreadsheet. It's every position that we open, every position that we close. If you do not have the time to watch throughout the course of the week, I get it. Like a lot of people go, how am I going to use all this? We have an update video in 12 minutes. Okay, we give you everything. So I keep these videos to 12 minutes long. We update every Friday. We do an update video. And this one it's just 12 minutes. It'll update you on every move that I made. And don't think you have to sit there in front of your screen and like, I gotta get these trades on. You can do stuff on a Friday morning, like a Friday morning. I'm gonna update you on everything so you can do it at that point. Bonus number 5, technical analysis toolkit, Tech 101, 201, 301, MACD, 21 other technical analysis classes, day trading. If you're into the day trading, treasure chest, we have everything from Nasdaq futures to ES futures blueprint, consistent intraday strategies and setups. This is an options course, 11 other day trading classes. Bonus number 7, this is one I would write down. 5 essential building blocks to successful trading. That's Steve Miller's. It's a psychology class. I don't care how much experience you have. I think every individual investor, trader, or otherwise should go through that particular class. I always say write it down because it kind of falls by the wayside. We have right now, I think we have 140 some odd classes inside of the archives. 140 classes. We've literally built the Netflix for traders. That class is up there in the top 5. I didn't do the class. Steve Miller did it, but still up there in the top 5 for sure. You got to see that man will change the way you think about risk. Bonus number 8, quick start guide to Ultima. If you know premium selling already, this is a quick start guide. What's a quick start guide? It's just like if you buy a new printer, you open up this quick start guide, learn how to use it like that. What our members are saying, okay? TheoTrade is the first educational trading service, okay, that I am actually making a profit, and one which I can clearly see a pathway to retirement, right? We give everything you're going to need to trade, to invest. We give classes, coaching, email access to the instructors. There's a live trading room, indicators and scans. We have mobile. By the way, we have our own mobile app as well. It's let's see if I can bring up the mobile app in here. This is everything you're going to need to succeed in here. By the way, there's the mobile app. Oh, okay. It's kind of weird looking at this in the camera. But the mobile app, you can actually see all of the messages that are coming through. When I say the messages, I don't mind showing you, okay? That's every one of the trades that we're doing. And each of these messages, I have it set to push notification. So I get a text message and it pushes it. I also wear the little Apple Watch. By the way, buy the cheapest one possible because this is a brand new Apple Watch. It's $300. I actually prefer the one I had previous to that, which is sitting right here. This one is a 6. I think these are $200. It's the best thing you're ever going to wear because when the text message comes into the trade, it literally taps you on the wrist. This one is, it's the hand-me-down one, but yeah, by the way, the 7 is worthless. I actually prefer the older watch, and I think you can buy one now for $200. Where at Walmart. Anyway, we've literally built the Netflix for traders. So this is everything you get. Access again to 100 trading classes, new monthly classes, text push notification. You can open up Tastyworks or open up a Magnify account. My closed year-to-date profit for Ultima Trades has paid for a yearly subscription. If you like this after 3 months, we can continue. You can decide at that point whether you pay the $297 or you can even pay for a year if you want. Anyway, this is everything you get. Ultima, Quick Start Beginner's Guide, over 100 trading classes, access to our chat room, which also gives you access to email the instructors. Okay, we return emails. TheoTheo portfolio, which is the Ultima premium selling portfolio. Technical analysis toolkit, day trading treasure, mindset mastery. Okay, quick start guide to Ultima. All right. Again, it's TheoTrade.com, Tastyworks, or TheoTrade.com/mag. M as in Mary, A as in Apple, G as in George. By the way, the Magnify, just to clarify, you only have to fund with $100. And you can actually do that almost instantaneously. So when you open up the Magnify account, you just put a little bit of information in there at the end of it. Okay, you link, you fund, you're good to go. What our members are saying, absolutely love this freaking website. There's so much here, so many different flavors. I can't pull away for more than 15 minutes. Can't get any work done. You guys find that for yourself, though. TheoTrade is the best by far. I've been with them. I'll be with them for the rest of my trading career. No questions asked. Okay. So again, we answer trade-related questions. Like if you ask me, should I have this much risk on? I'll tell you my exact opinion, and I'll tell you if it's an opinion or if it's fact in there. No question about it. Answering a few of your questions in here. Again, all you need to get started is a laptop, an internet connection. In fact, I'll even make the argument you don't even have to have a laptop. You probably just have some type of mobile device. So as I said a moment ago, I'm not a big like Apple geek, but I use an iPad. I use the Apple Watch. I got my Mac issued underwear on right now. The point that I'm making with that, I use the devices. For $290, what it cost me for the iPad, it gives me total freedom. You know, for the $300 the stupid watch cost, okay, total freedom, because it's just tapping me on the wrist and then I can execute. And by the way, you don't even have to have an iPad. You can probably just watch everything off this and execute over the phone. That's fine on there. We don't do a membership. We don't auto renew or bill. So you don't even have to give us a credit card today. Again, you're just opening up a Tastyworks account or a Magnify account. We provide weekly update videos so you can follow all the moves. We archive everything. Every word spoken since inception of TheoTrade in 2016, every word spoken has been archived. We also give you, provide you access to TheoTrade mobile. You can download archives, view them at your leisure. When you are actually enrolling for TheoTrade, add a cell phone number because you're going to receive text messages. You can email us anytime, receive a response within 24 hours, including trade-related questions. So that's fine. James was asking, we are available to Canadians. However, time out on that thought. If you're from Canada, you're going to have to use an alternative brokerage firm. This deal does not necessarily apply to you if you are from Canada. You'll have to come in, pay $297, and you're part of TheoTrade at that point, and we will then provide you a brokerage firm that you should use, which will save you a lot of money. All right. Variations of all the trades are available inside of an IRA or retirement account. And again, everything we do here is archived. You can even watch the stuff on your mobile device and speed it up. Okay. We have speed control on the mobile device, which is really cool. Listen, it's, enroll for it. That's all you can really say for this. I mean, we don't have a lot of people that come back and you're like, wow, that wasn't a great deal. You're going to love Tastyworks. I tell this to people, Tastyworks is the up and coming thinkorswim. When thinkorswim, the first 3 to 5 years thinkorswim is in business, we had very limited functionality, and thinkorswim became the absolute beast. Tastyworks is next generation thinkorswim. If you've ever looked at thinkorswim, you're like, oh man, it's getting old. It's looking like DOS these days. DOS 2.0. Okay, I'd agree. The executive team from thinkorswim, okay, which was bought by Charles Schwab. Charles Schwab now owns TD Ameritrade. The executive team, specifically a gentleman that was one below the CEO of Charles Schwab, he left. Okay, just a few months ago, he left. Guess what? Showed up at Tastyworks. He's the new CEO of North America for Tastyworks. Everybody sees the move. We're just ahead of it. That's it. That's the bottom line. And in opening an account here, we incentivize you to open an account. We give you the education. Listen, it's in our best interest for you to be successful. Tastyworks only wants accounts that are going to be successful. Magnify only wants the accounts that are going to be successful. It's the only way that you continue to trade. Tastyworks doesn't make money, okay, unless you're active. And the only way you're going to be active is with good education. So it's theotrade.com/Tastyworks or theotrade.com/Magnify. I think I got most of the questions answered in here. With that, again, if there are other questions, email us support@theotrade.com, support@theotrade.com. The rest of you, open up the accounts, receive access to Brandon Chapman's Ultima beginner's guide, receive access obviously to everything that we do here at TheoTrade. You're not going to be disappointed. I think you guys will love what they're doing at Tastyworks as well. Again, we've had a great relationship with both Magnify and Tastyworks. With that, I want to thank everybody for joining us today. To each and every one of you, if you have questions after this, as I said, you can stay here on the Zoom and we can answer a few questions for you, or just email us support@theotrade.com. We'll get back to you here in the next few hours. Again, opening an account at both TheoTrade and or Magnify is as simple as a couple of clicks. Obviously entering in some of your personal information. It's opening up a brokerage account. Just be aware of that. Thanks everybody for joining us today and have a wonderful afternoon. Bye-bye.